If you got a bad case of fear of missing out, FOMO, when it comes to Bitcoin and Ethereum, you're not alone. In this video, we'll try to figure out how to deal with it, what to do in order to not miss out to the moons, and other possible ways to invest in crypto. Let's do it. Hi there, my name is Ken. Here I talk about personal finance and investments. If you are new here, make sure to smash the like button and subscribe to the channel for more videos. True to form, the cryptocurrency market has been volatile all year, offering investors plenty of chances to buy the dip. But taking advantage of a steep sell-off is easier said than done, and prices are crashing all around you with no end in sight. Now that we are on an uptrend, folks are kicking themselves for not buying at lower prices. Here are 5 things you can do right now to ease your crypto FOMO in a calm and collected way. Number 1 is to determine your ideal cryptocurrency allocation. In his book, The Psychology of Money, Morgan Housel discusses the importance of knowing what game you're playing. Although we may be buying the same stocks or crypto, we all have different investment objectives. Some people want to grow wealth over time, others want to day trade for a quick buck. Then there's everyone in between. Knowing what you want to get out of an investment can help set the tone for a reasonable amount of exposure to crypto that suits your risk appetite. Second, you have to decide which crypto make the most sense for you. After you've determined how much you want to invest, it is time to figure out which cryptocurrencies are right for you. For example, risk-averse retirees might benefit from the high interest rates available from stablecoins. Bitcoin serves as a starting point for new investors. Ethereum adds more risk with more potential upside, and larger altcoins like Cardano or Solana or smaller altcoins like Polygon or Cosmos offer a high-risk, high-reward option for risk-tolerant investors. I'll tell about some more altcoins later on. No matter what you buy, understanding what you own and why you own it can help separate an investment from a reckless gamble. Third, you gotta consider buying a small portion now. Whether it's $10 or $10,000, having skin in the game should instantly help alleviate some crypto FOMO. It's also a chance to get used to the differences between a crypto exchange and a brokerage account. One of the reasons I bought my first crypto in May was because I wanted to learn more. Having a stake in something provides an added reason to stay up to date with the market and sharpen your understanding of why Bitcoin and Ethereum could be good investments. Then you got a dollar cost average over time. One of the lowest stress ways to invest in crypto is to simply dollar cost average into the position over time. The theory is simple. Instead of trying to time the market or wait for a dip, allocating a portion of your income to crypto and automatically buying in stages instead of all at once is a good way to build a position. For example, Coinbase allows its users to dollar cost average into any of the dozens of cryptos offered in its platform. On Coinbase, you can customize the dollar amount and frequency of purchase. For example, you could set up a plan to buy $10 of Bitcoin daily, weekly, on the 1st and 15th of the month or monthly. And if crypto takes off, you'll benefit. If crypto plunges, you don't mind because you can now buy more for the same amount of money. It's a win-win scenario that helps you sleep at night. And the fifth, the most important thing, be ready for the next sell-off. So far this year, each sell-off was followed by a rally, the most impressive of which transpired in October. In less than a month, Bitcoin's price increased by $25,000, representing more than a 50% gain. The cherry on top was a fresh all-time high of nearly $67,000 on October 20th. In the last 6 months alone, there have been 2 major drawdowns in the price of Bitcoin and Ethereum. From late May to late July, Bitcoin and Ethereum both lost over half their value before rebounding in August. In September, a smaller correction sent Ethereum's price down 17%, and Bitcoin lost 12% of its value. Bitcoin and Ethereum might be hovering around all-time highs right now, but it's important to remember that they spent roughly half of the last 6 months on a downtrend. This is all to say that both cryptos are subject to a lot of speculation, and sudden and sizable moves to the upside and downside. Patience and the courage to buy when prices are crashing have been 2 qualities that have paid off big time. Instead of throwing a big chunk of money at crypto now and hoping it works, investors can earmark a portion of savings to use on Bitcoin or Ethereum if the price falls 10%, 20%, 30%, etc. An investor can either wait for this to happen or simply set up a limit order at the desired price through applications like Coinbase Pro, Binance, and etc. There is plenty of time to get on board. The good news is that the rise of cryptocurrency is likely still in the early innings. In the last year alone, we've seen a surge in institutional adoption, investor protection, and innovation. The sheer scale and scope of projects that are taking place on Ethereum and Solana blockchains are nothing short of incredible. 10 years from now, it wouldn't be surprising if crypto played a role in many of our lives, either through investment or application, in ways we can't begin to imagine right now. As previously mentioned, one of the reasons that crypto markets are volatile is that many participants are focused solely on short-term moves. They are playing a different and riskier game than long-term investors. A game that's more concerned with where prices are headed in 10 days than 10 years. The 24/7 crypto market feels fast, but it's important to keep in mind it's only as fast as you make it. Zoom out, and the charts on Bitcoin and Ethereum speak for themselves. Zoom in to a 3 months or less time period, and there is no telling what you'll find. Taking a slow and steady approach to your investment offers the best way to capture long-term upside. Here's, as promised, some more altcoins to consider. Remember that this is not a financial advice. One off-the-radar cryptocurrency that's consistently had people's attention for years is Stellar. The ticker is XLM. As of October 28, Stellar was the 25th largest cryptocurrency with a market cap of $7.9 billion. What I'm looking for in financially focused blockchain projects are efficiencies that stand out. Using existing banking infrastructure, cross-border payments can take up to 1 week to validate and settle, which isn't very efficient. With Stellar's blockchain, more than 180 fiat currencies can be converted to Lumen coins, XLM, which is the protocol token on Stellar's network, transferred across borders and converted back into a preferred fiat currency. And the coolest thing about it, time to completely validate and settle said cross-border transaction, a couple of seconds. Another under-the-radar cryptocurrency that looks to have far more long-term potential than Shiba Inu is Nano. The ticker is Nano. According to data from coinmarketcap.com, Nano is the 119th largest cryptocurrency, which has market cap of $669 million. Nano aims to revolutionize digital payments, and there are 3 things about this crypto project that really stand out. To begin with, Nano's developers shunned an open source network with a central blockchain. Instead, the network utilizes a block lattice blockchain. With the block lattice, every user has their own blockchain that they can add to. This means no competing with other users to add blocks and no hassle in gaining consensus. Since only the sender and receiver of a payment are needed for consensus, verification is quick. In theory, the block lattice should also allow Nano to scale rapidly without the network's performance being adversely affected. A third and final crypto with significantly more real-world potential than Shiba Inu is Qtum. The ticker is QTUM, which is pronounced Quantum. According to CoinMarketCap, Quantum is the 88th largest cryptocurrency with a market value of $1.2 billion. Although Quantum has financial applications, it's really designed to be a quick and secure blockchain solutions for businesses. The standout aspect of Quantum's blockchain is the combination of Bitcoin's U2XO security protocols with Ethereum's virtual machine. Quantum's developers have taken the best aspects from the top 2 digital currencies by market cap and created a network that incorporates smart contracts. Smart contracts are protocols that facilitate, verify, or enforce the negotiation of contract between 2 parties. Since smart contracts are transparent on blockchain and legally binding, they are the perfect tool to attract businesses. Let me know in the comments what cryptocurrency do you believe in most. Here are more other videos about personal finance and investments for you. Make sure to subscribe to the channel, smash the like button and hit the notification bell. See you in the next video.